Evening and welcome to the Moving Home with Charlie weekly workshop with Charlie Lambden and guests. Live at 8 p.m. every Wednesday. This show is here to help all home movers of the UK be better prepared for dealing with the gauntlet that is trying to move home.
Helping make sure everyone has a home.
Whether you're buying, selling or both, it's a live show. So if you have a question about your move, pop it in the live chat. In the meantime, sit back, have a noisy slurp of your drink, and enjoy the show.
Sorry, I can't resist it. Good evening, everybody. Welcome back to another Wednesday's weekly workshop with me, Charlie Lambden. This is Moving Home with Charlie. I've got a lot of new followers, and especially for those new followers, I wanted to do a bit of a quick recap because a lot of new followers, especially on X, sometimes get confused and they're not sure whether I'm saying that I'm in favor of buying or I'm not against buying, or am I helping buyers? Am I helping sellers? What do I want? Should people buy homes or not? And I wanted to just quickly recap and reset the whole point of this channel. I am on the side and want to help anyone who needs to move home. Whether that means you're buying your first home, whether that means you're selling to then buy, whether you're selling because you need to move, and whatever the reasons are, buying, selling, renting, anything to do with needing and wanting a home. The more people who have a secure home, the better as far as I'm concerned. The more people who are moving house, the better as far as I'm concerned, and as far as everyone's concerned. But this comes across as conflicting messages because basically there's a balance. And if you follow my content on X, you might be forgiven for thinking that I'm expecting the end of the world imminently and therefore nobody should ever buy a home. And that's not the case at all. The reason that there is such a cautionary tilt to my content is because I am trying, and I appear to be the only person trying, to rebalance the endless, everything's great, always buy a home, overpay, borrow, spend as much as you can't go wrong, property doubles every 10 years. I am trying to counterbalance that utterly relentless onslaught of messaging that house prices only ever go to the moon, you cannot go wrong, you should borrow as much as you can. And I'm pushing back against that because I don't believe that anyone should buy a home unless they've considered the worst case scenario if everything goes wrong. And they've thought that through and gone, yeah, even if that's the worst case scenario, we're still prepared to accept that risk and go ahead and buy. Because it doesn't matter which political party is in power, you need a home. It doesn't matter which president is in power in the United States, you need a home. It doesn't matter whether the economy is going up, down, or sideways, you need a home. It doesn't matter what's happening in the news, you need a home. And of all the options on offer, the nicest option is to have a home that you own, and therefore you have security for you and your family and your future. The trouble is that this industry, the moving industry as a whole, tends to exploit people's desperation to own a home and turn it into you guys overpaying, first and foremost, massively overpaying for new builds. That's where, it's no coincidence that the people offering 95 and 99% mortgages say, yeah, but you can't have one of those for a new build, right? Because they know that new builds pretty much go to negative equity the moment you buy them if you've got a 95% mortgage. Overpaying for a property because you're tricked into thinking that you're competing against other buyers when you're not. Overpaying because the conflict of interest between the in-house mortgage broker and the estate agent, where the mortgage broker in the office of the estate agents checks out your finances and has a word with their mate out the back having a fag going, yeah, they could afford another 20 grand. Because that happens on a regular basis. And nobody warns about all of these pitfalls that end up with you overpaying, wishing you hadn't, and being trapped in a home that becomes a millstone around your neck. And the worst case scenario, you end up losing it because your mortgage is worth more than your home. You can't sell it. Your home gets repossessed. And the bank comes after you for the difference between what they sold your home for and the mortgage until you've repaid it. That is a nightmare that's not worth risking. And so my approach is always, if you need a home and you want a home and you found a home that you can afford without overstretching and you're not overpaying, which is a personal subjective calculation, always buy a home. It doesn't matter what the housing market's doing. It doesn't matter if it's busy or quiet, going up, going down. If you want a home and you can afford a home, always buy a home, but don't let the bastards make you overpay. Right. I've got waiting in the wings Lewis Shaw, who is one of my partner mortgage brokers and a regular guest on the channel. And he's here to chat through what's happening in the mortgage market, share a few frustrations he's got with people when they're applying for mortgages, and take any live Q&A. And at 8:30, we've got Alex Gramwater, also known affectionately as Cuddly Housing Stig. I added the cuddly for effect, but he's cuddly. Especially when he's had a couple of glasses of wine. And we're going to be talking about inflation, surprising everyone with its bounce up, or surprising most people, and the Office for National Statistics and their fictional UK average house price, which today mysteriously dropped £22,000, or nearly 8% in 1 month. But it's okay, it's all fine. This is a perfectly good explanation. And it doesn't mean that you can't trust the average house price figures they put out. It's all absolutely fine. And Alex will be here to talk through that as well. And we're also going to be talking about every single month, how they overstate specifically the year-on-year house price growth, which is why the thumbnail of this video is a screenshot of their 4.6% up, crossed out. No, it's 2.3%. They are not comparing apples and apples when they do that yearly house price growth, and they're overstating it significantly. All of which is relevant because it's all used to get you to overpay. Didn't you see ONS's house prices have gone up nearly 5% in the last year? And to people who don't have the time to go and investigate whether or not that's bullshit, look at, really? Oh, okay. Hurry up or you won't get on the ladder. And this is why it's important that you guys are equipped with the information to be able to call bullshit when the ONS comes out with stuff like that. And then you get estate agents parroting ONS figures and newspapers parroting ONS figures. And you can go, no, sorry, disregard that. Anyway, I could go on rambling, but I'm going to stop and invite Lewis to join me. Good evening, Lewis. How are you?
Yeah, good. Thank you, Charlie. How are you? Feeling a bit better?
Onwards and upwards, just don't let the bastards get you down. Well, it sounds a bit like you have been letting the bastards get you down.
Yeah, a little bit. It's been a funny old week. Well, it's been a funny couple of weeks really. January was very busy. February started busy, and then it's kind of petered off. But then it is half term, so that's kind of expected, I guess. That's kind of expected. But yeah, there's been some funny ones this kind of past 10 days or so. Some very funny ones. And of course, I talk to a lot of mortgage brokers day in, day out, because we're talking amongst ourselves. It can be sometimes, well, it is often quite a lonely job, even when you work for a big company. Often you're working in an office on your own, or you're working from home on your own, so it can be quite lonely. So we tend to all kind of stick together well. The ones that you kind of know and get on with. And so we talk a lot amongst ourselves. And generally at some point during the week, or during each day, someone will send a message into a group chat or ring up and start ranting about something, and we're all seeing a similar kind of thing. We're all seeing a very similar kind of thing, and it seems to be getting worse. And when I say it seems to be, I mean I don't mean like this past couple of weeks. I mean as in over the past few years. And so it's really to kind of highlight some of the things that can make buyers' lives easier. In all honesty, it makes buyers' lives easier, it makes our lives easier, and makes the whole process easier. And it was just really to talk around those. And obviously, I'm always ranting on about documents anyway. But one of the big things, I tweeted this the other day and said that the worst in innovation in mobile phone technology has been the screenshot. Right? Now, so that's one of the things that really drives not just me, but every single broker I know, drives brokers up the wall, because especially when we're in a volatile interest rate environment. Yes, it's not as bad as it has been, and it was terrible during or just after the following the mini budget when everything went haywire, and there was no time whatsoever for people to think about stuff. But we still are in the situation where mortgage rates are changing frequently and at relatively short notice. And if a mortgage broker doesn't have all the documents on file, they can't, for compliance reasons, FCA rules and regs and all the rest of it, we can't submit cases unless we have the correct documentation on file. And so that's why when anyone's buying a home, and brokers might seem quite belligerent about it sometimes, about documents, and get very kind of anal about it. But that's the reason why, because we've seen, all of us, we've all seen people lose out on deals, or even in some cases on homes, especially if there's a race, which it doesn't happen so much now, but it certainly did during COVID, where people were in races to buy homes. We've seen people miss out on mortgage deals. We've seen people miss out on homes where we're waiting on documentation, which is why most brokers, all the ones that I know, put so much emphasis on getting them right at the start and in the right format. And so I'll just say this about screenshots. And this goes for anyone that's buying using any mortgage broker. When you ask for a document, we're asking for a document, not a screenshot of a document. And there are reasons why. I know that seems really quite pedantic, but there are reasons why, particularly around payslips and bank statements. Driving licenses, passports, that's not so much, but certainly payslips and bank statements. And the reason is that we have to be able to check that they've not been amended. Okay, these days fraud is more sophisticated, and in fact, online there are places where you can go online and buy credit reports and bank statements and payslips and all sorts of things. And they, companies that sell this kind of stuff online get away with it because they dress it up as, it's for pretend use, or it's for acting purposes, or whatever it might be. And some of them are extremely good forgeries. But the reason we ask for those is because even though we're acting in a borrower's interest, we still, because effectively the lenders are our clients as well, so to speak, we're also the first line of defense in fraud. And so the reason that PDFs are so important, particularly with payslips and bank statements, is because we can do checks. We have software that does checks, and also lenders can do it to check that they haven't been amended, that they haven't been altered. Okay, so that's why documents are so important, and because I've seen it firsthand. Every single broker I know has seen it firsthand, particularly with interest rates when they're moving quickly. If we don't have it on file, we can't submit. And that can be the difference between that rate and that rate. Obviously, when they're coming down, it's not a big issue. But when they're going up, or when there's some kind of time specific reason, then it does matter. So big things, please stop sending screenshots to whichever broker you're dealing with, wherever they may be in the country. They won't thank you for it. And all that's going to happen is they're just going to come back to you and say, can you actually just send me what I've asked for, please? And then you're going to have to spend. So in effect, it ends up taking you longer to do it. You've got to do it again. You might as well just do it first time round and do it right. So that's the first one. Big one is documents.
And in particular, the two documents I mentioned there are bank statements, which every online bank I know of and have used, you can download a PDF of your bank statement, and that PDF that can be sent to you by email as an attachment, right? That's acceptable.
Yeah. So download the bank statements. They're perfect. There are some banks where you can't download statements from the app. Notably, I don't think you can you might be able to on Barclays now. I think NatWest, you can't on NatWest. But here's another thing.
Someone called Adam here saying Nationwide won't give him a statement for a savings account. They don't allow.
They should. So you would need to talk. You need to speak to them and order one because they can send them. Because I've dealt with people that bank with Nationwide and have savings accounts. They can send you them. You just have to speak to them, Alternatively, they can post you send one in the post. And this is where kind of preparation matters, because if you're waiting on a deposit statement, which can take 7-10 days in the post sometimes, and you've not already ordered it, and we can't just use a screenshot, and we can't use what they're providing, and you've got an estate agent chasing after you, or maybe, as I say, a deal's being pulled, whatever it may be. But that's one of the reasons why preparing documents is so vitally important. Sorry, Charlie, you were asking. Sorry,
No, I wasn't. I was just. I mean, this comes into what I'm always saying for both buyers and sellers. The one thing everyone could do in who wants to move house, who's heard about the frustrations of how slow the process is just be better prepared. Actually, the truth of it is, and of course, big moving companies, lenders, brokers, estate agents will never say this publicly, but privately they'll say it's movers that cause more delay than anyone else. Yes, bad conveyances will make it worse. Yes, brokers can hold things up, but actually, on the whole, it's movers taking forever to get their documents together. It's sellers taking forever to get their TA6 and their TA10 forms filled out for their property, which are required forms. They're just months going by and they're not getting on with it. And this represents an opportunity for forward-thinking movers to be a step ahead of everyone else. And if you're buying and making an offer on a property, you're like, I've got everything. I've got a gold-plated offer here. Ding, 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 ding. There's my proof of deposit, my conveyancer confirming approved source of funds, my mortgage in principle, credit checks in full. Tick, 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 tick. I can buy this house very quickly. It costs you nothing extra to be prepared. You just have to get off your arse, be prepared, and don't send fucking screenshots.
Yes, that's true. But an important point on bank statements, actually, this is something that quite a few people, and it's understandable why this happens. So this is not to get anyone here, but there's a difference between a bank statement and a transaction list.
Yes.
So, for example, on NatWest, I think I use them because this is a common occurrence with people that bank with NatWest. So not picking them out particularly, but you can download transaction lists which don't show your full name, address, and account details, and so they are different. So there's a difference between transaction lists and bank statements, and that often can catch a few people out because sometimes they look almost identical in some cases.
It's got to have your name and your home address on there.
Yeah. So one is documents. I did a poll on on Facebook. There are a number of mortgage broker groups. Most of them are private. For the reason that you ended up, we did have a period of time where just members of the public were jumping in and asking questions, and some people got a bit fruity. And so it's now private, so you can't. It's not like searchable. But it's interesting that most days, most weeks, there's always something around documents.
You mean a problem, an avoidable problem around documents? Yeah,
and I think to make, like, buying a home is stressful enough, right? I mean, it's you might be competing against other buyers. The seller might be difficult to get hold of. You can't get in for the viewing, and when you try and make offers, the estate agents might not be particularly on the ball, and all these other kind of factors. And you desperately want that house because it ticks all the boxes. So it's stressful anyway, right? I mean, we all know that. But being prepared, I can't understate this. I mean, recently, I had a young couple, first-time buyers, and they bought a house from start to finish in just over 8 weeks, which is no mean feat. I mean, that was quick before COVID and before everything went to that shit. So it's no mean feat, especially now with, of course, conveyancers being very busy leading up to the stamp duty change in March. And it was purely and simply because they were just fabulous. They were just fabulous clients because they didn't have a clue, right? And they were very open about, look, we just don't know what to do. Just tell us what to do and we'll do it. And they did. And so documents were
very nice, isn't it? When you have people who understand instructions, it's
massively. Like, and we instructed the conveyancers, and I said, look, sit down. You've got the information. Fill it in tonight. Do everything you need to do. And because they just did everything, and I said, as soon as something comes in, address it, do it, bang. And they were done in just over 8 weeks. And I was like, you see, it's not that it is stressful,
Yeah.
And it's not always easy, but it is quite simple in terms of what you have to do from a buying and selling point of view if you get it right at the start. So that's one of the things. And then I think you wanted to have a chat about mortgages. Now, of course, we've had the inflation data out today, which is not particularly pleasant reading. And I think there's a new Twitter account. I think UK House Price Analysis. I can't remember the handle now. But some quite useful information on there, saying that regarding what I mentioned, that there may be some deals being pulled, and if you remember, I think was it last week or the week before that Santander came with a sub 4% mortgage rate.
That's right, 3.99% if you get a 90% deposit. Oh, I'm joking. I know
yeah. So 3.99 with various fees for 2 and 5 year deals, and then it's kind of on the grapevine now that that's probably going to go tomorrow. So it's just as quickly as that, just one inflation metric has that knock-on effect. And when they're kind of really trying to squeeze margins to get some lending volume in, that can turn around on a sixpence.
Yeah.
And so that's going to be, there will be people that almost certainly tomorrow that were wanting to apply for that, and then there's a good chance that at some point in the day, in the morning, in the afternoon, whenever it may be, an email will drop into our inbox to say at 5 p.m. and this is gone. So even though we're not in those volatile times, that can still happen. And yes, it may not make a huge deal of difference, but even if it's 10, 15, 20 pounds a month, it's money that's not in your pocket anymore. And you're generating more interest on your mortgage. So it does have a real world consequence. Yeah,
it does. And in the same way that when they cut rates, mortgages didn't come down last year. The fact that inflation's gone up, which means they might not lower rates, doesn't necessarily mean mortgage rates are going to go up, but it does reduce the chances of them coming down any further, doesn't it?
Yeah. Yes, for sure.
That's the truth. So yeah, that's not good news for anyone. Higher inflation. That's not good.
Especially when you consider that we've yet to see the NICs increase. Obviously, that doesn't necessarily directly, but it probably will.
I'm just going to say it to you because you and I haven't had a conversation about this, right? If you start to line up, and I haven't got them, I've only got them off the top of my head, all of the things that are lining up for this year. So the stamp duty going up on the 1st of April, and Zoopla and Rightmove have both already said we're starting to see the impact of that already hitting higher interest, right? That's going to hit. Then you've got the employer's national insurance contributions. I mean, just the fact that that's coming down the line has already had a measurable impact on employment and that kind of stuff. That's just going to get worse. Today, there was data out about the number of companies going to insolvency is now the highest since the global financial crisis and still rising, even though it's a smaller as an overall proportion of companies. But there are many, many, many one-person limited companies out there at the moment, which is why I think which there weren't at in 2008.
Yeah.
And I think that also skews it. So I do think that to have a higher number of companies going bust, you add all these things in, and water bills are going up, and council tax is going up, and the energy price cap's about to go up. It's just nothing's going in. So, I mean, food inflation appears to have eased in the official figures, but in real life, it doesn't feel like it has.
No, it doesn't. And then you've got, of course, the increase to the national minimum wage in April as well. Yeah, not that I begrudge anyone getting a higher wage. I really, really don't. But the trouble with all these things hitting at once are going to
people. Yeah, and that's going to hit businesses and make it harder for businesses. And the other thing about the minimum wage is that actually it means that there are businesses that might give certain people jobs for less money, and those people are happy because it works out for them. Like, they live next door, and they're maybe everyone's happy with the arrangement. Yes, are there employers that exploit it? Yes, and they ruin it for everyone when they make the government put in these. But actually, a higher minimum wage by force doesn't help the economy.
No, it doesn't. So to increase employer costs in two ways at the same time is it's crazy. It's crazy.
So I find myself, I for several years now have been trumpeting warnings about people buying for financial reasons, thinking it's safe, just before prices come down. And I find myself wanting to turn the volume up on that warning higher now than at any time in the last couple of years. Have house prices somehow held on more than I expected they were going to? Yes, no doubt. At the lower end. At the higher end, no, they've come down a lot, but there's no official data about just what's happening to higher end house prices. But everyone in the industry knows it's a bloodbath
at the top end of the market, for sure.
Top end of the market, right? Prices have come down horribly, but there's no real data for that we can rely on enough. So the risk for people buying for the wrong reasons because their mum, dad, and auntie Glads told them you can't go wrong with property. And I get people contacting me and saying, I bought a new build in London 3 years ago because my family and my friends and everyone told me it was a great idea. I now need to move and I can't sell. I can't sell. What do I do? What do I do? And no one ever sees it coming. And I will never change my mind that you should always buy if you need and want a home, you're going to plan there and stay there long term. It doesn't matter what the market's doing in that situation. But despite me battering my head against a brick wall to get this point across to people, most people buying houses don't watch this channel. Even though it's the most watched moving channel on social media that I'm aware of, in terms of moving as opposed to financial advice. There are lots of financial advice, property investment channels. But it's like lambs to the slaughter out there, as far as I can see. Lemmings going out and going, oh, everything's okay. Is it all right? Okay, where do we sign then? And yeah, we'll go into a bidding war. We'll pay up, and our broker says we can afford this, so we'll pay him. Which, and it's just there is going to be. We've got mortgage repossession claims are 39% up year on year. Still a very low number overall, and that's a good thing, right? It's very, very good that there are still only 2,000 people a month having their homes taken away. But that's still 2,000 people a month, and it's 6,000 people a month on landlords, right? Having their properties, having repossession claims lodged. And that's the repossession claims. Those repossessions haven't happened yet. So we know for certain that repossessions are going to rise. Stock levels are rising. And eventually, all of this stuff that's a downward pressure on price will eventually build up. And when something happens on the demand side, which stamp duty will do, or if unemployment starts to get really bad, or if there are these mass public sector layoffs that have been talked about, have been mentioned, but didn't get that much press, at some point it gets like I don't foresee a situation like we had in 2008, because that was a different reason. That was suddenly finance disappeared, and no one could buy, and that's what caused it. I don't see that happening. But
not to mention, lots of people took out mortgages they genuinely couldn't afford. That's been nipped in the bud now, in the main.
Well, there are a lot of people who come into their fixed rate who now can't afford their mortgage.
I mean, there will be cases of that. There will be cases of that. But I mean, when you think that even the crazily low rates of COVID, where we could kind of 1%, they were still stressed at SVR plus 1 as a minimum, and more than likely SVR plus 3. So they were still stressed at lowest case scenario 6.5. So they were. I mean, I don't know if that takes into account all the kind of factors that go along with increasing interest rates, where you're generally going to have inflation broadly. I don't know if it takes. I don't know, but in most cases, it seems to be that there are always going to be the people that struggle for one reason or another. But
I just want to go through a few viewer comments, if we can, Lewis, quickly before Alex turns up. Joanne Ward says, we're now house hunting in North Cornwall, South Devon for our forever home. Your conveyancer and mortgage advisors have been brilliant. I don't know if she's one of yours or what.
That must be Graham's. Yeah.
But that's cool. Thank you, Joanne. Good luck. Great to hear. Emma Metcalf says, I'm happy. Just moved into my first home, and the cat, Flo, I rescued, just had 3 baby kittens. Pumpkin, Acorn, and Boo. Only just moved in. Very nice. Hannah asks a question. For those who didn't or weren't adults during the last collapse, What does this mean? Should we be saving and not spending in this kind of environment? I mean,
That's kind of what precipitates it, though, isn't it? If we all start saving, then the economy does collapse. Definitely.
yeah, you see, I think I don't think I can't agree with the line which is you should keep spending for the economy.
Oh no, I'm not suggesting it, but I'm just, but just
Yeah.
factually, because my income is, so my spending is your income and your spending is my income and vice versa. So if we all just stop, then that would definitely grind everything to a halt because it relies just on this big recycling effect, doesn't it? So
I think this is why people are cross with the government talking about easing mortgage lending rules because
for sure, it's
because
crazy.
not necessarily because of people not being able to afford it, but because the house prices and the cost of housing is what's sucked the life out of the economy because people don't have enough money left over to go and spend it nicely and enjoy a good quality of life. People are just skint. So I'd like to ask you, Lewis, what you think about the prospect of the Labour government saying, let's ease mortgage lending regulations, when the whole reason that they were tightened, remember, was to stop excessive lending or excessive borrowing. What do you think about it?
I'm not a fan. I'm not a fan. Now, I'll caveat that. It depends what they mean by ease regulations, because that can be very innocuous to quite disastrous, can't it? So it depends what they mean by ease regulations. I don't necessarily have a huge. I'm not massively against potentially looking at deposit requirements. On the proviso that we're talking about, you're tying yourself in for 7 years or something like that, and your lending is massively curtailed. So, for example, if they said we're going to introduce a new bracket and you can have 2.5% as a deposit, when often the deposit is what generally is one of the defining factors whether people can buy a home or not, because deposits are, if you've not got access to the bank of mum and dad, that's one of the hardest things to overcome. So I don't necessarily have an issue with something like that, as long as it's a case of but we're tearing back the income multiples. Your credit profile has to be absolutely spotless, and you're tying in for a minimum of say 5+ years to give yourself chance to actually build some equity. All those other kind of factors as well. So you can see where that could go. And it could be done in a safer way. Nevertheless, it will still carry a heightened risk. You can see where that could go. But just this idea of kind of reducing regulation, let's just loosen the nuts. No, I think that would be a catastrophe, personally. Everyone keeps tinkering around the edges, right? We just need to build more affordable homes, and we need money to stop pouring into the property market, as it has done for the past 40 odd years. That's the reality. So
Lewis,
the availability of credit is not going to fix anything.
I've got your diagram up on screen. You wanted to run through this quickly. Do you want to just tell people what it is? I mean, I had a look at it, and it's pointing out to me that basically the rate is about the last thing you should worry about.
Yes.
The mortgage, right?
Yes.
And no one ever thinks about these other 6 things. Do you want to, because Alex is here. Evening, Alex.
Good evening, guys.
Hi, fella.
Do you want to whip through this quickly?
Yeah, sure. So basically, when we're talking to customers, and this goes for myself and every other broker I know, most people are constantly asking about interest rates, because that's the kind of thing that people think they should be asking about, right? And no one wants to. If someone says, "Oh, have you got any questions?" and you don't have any, people can sometimes feel as though they appear kind of a bit dim or something like that. Even So, what are the easiest questions? Like, what are the rates? What's the rates? And people get extremely hung up on this number, which is just a numerical expression of the cost of money over time, right? That's all it is. But in actual fact, the interest rate, and this sounds counterintuitive, is completely irrelevant. Completely irrelevant. Because you can either afford the mortgage or you're not, or you can't. And a lender, the mainstream, certainly, they're not going to over leverage you. So they won't lend you more money than you can afford. And a job as a broker is to make sure it is affordable and sustainable by looking in detail at your circumstances. So when it comes to doing the job, in terms of how a mortgage broker approaches the job, there's 6 things: budget criteria, affordability, product, term, preferences, and generally in that order, actually. So what's your actual budget? How much can you afford to pay? So when we're kind of looking at the right lenders in terms of making a recommendation, because we have to recommend a specific mortgage, okay? So the FCA regulations say we can't just give you 3 options you pick. That counts as execution only, which is pretty much banned other than in a few circumstances. So first thing is budget. How much can you afford? The second is, okay, so that's how much you can afford. Then which lenders do you meet with criteria? After that, of the lenders we've then got rid of, who's going to lend you the amount that you need? So that's the affordability piece. And then it's on to product. This is things like fixed or variable rates and for how long. Okay, so you want a 5-year fix. And then it's a case of, right, over how long can you have that mortgage? And that obviously tiers in with budget. So you want to spend £1,000, blah, blah, blah. So we match the term to the budget. Then the preferences, this is things like if you're paying fees or you want a free valuation or cashback or portability or overpayment allowances, those kind of things are the preferences. So once you've gone through those 6 layers, you end up with one at the top. That's the whole point of it. And we go, right, this is the right deal. And that rate, whatever it might be, as I say, is just a numerical expression of the cost of money over time for that particular lender on that particular deal. It's so inconsequential because you can either afford it or you can't. And it's the other 6 factors that actually play the biggest role in determining what's the right, course of action, basically. But I've seen people, and I know I've dealt with customers where I've gone through those 6 steps, as I do with every single customer. Well, not directly with them, but in my own mind and when I'm working. But where they've not bought a home because they've said, "I'm not paying that interest rate." I'm like, "Excuse me, what?" I'm not paying that interest rate. I'm like, but it's affordable. You can borrow. It matches it's within your budget. I'm not paying the interest rate. I'm like, that's mental.
It's a bit. I mean, I like to characterize it like this. It's buyers who don't understand the process of buying a home or getting a mortgage will ask, "What's the rate?" It's like their way of saying, "I don't understand what I'm talking about." And for sellers, they'll ask, "How much can you get? How much is it worth? What's my property worth?" That again is them just going, "I don't really understand the process of selling a house." Those 2 things are the same. Anyway, Alex, good evening.
Good evening, guys. Again.
It's good to have you here. I'm trying to contain myself a little bit.
I think I know where this is going.
Well, I was going to ask you if you would like to share with everybody, in calm terms, why the ONS, or not why, because perhaps it's only up to them why they've done it, but what the ONS has done today that means that, and I quote, the average UK house price just went down £22,000 in 1 month. I am severely hoping that your explanation, and we messaged about this earlier, will help people understand how much they should ignore this number.
A lot. I mean, okay, so as you pointed out many, many times, there is no such thing as the average house in the UK. The average house doesn't exist. It is a mythical beast. And what the ONS are
a bit like you.
Pretty much. What the ONS are trying to say, now, whether they are right or not is a different debate, but this is what they're trying to say. In recent years, as a nation, we have moved away from buying large detached properties and more towards smaller, cheaper, in inverted commas, relatively cheaper as an average purchase than previously. And therefore, their old average house price, which was £22,000 higher, did not actually reflect what was really happening in terms of the average that people were purchasing. Their basket of goods was incorrect, the way that they had calculated it. So what they've done is they have dropped all prices right back to the beginning of time, and they've just kept the inflation. So what I mean by that is the increase in house prices as a percentage the same, which is why if you look, we've lost 8%, 7.9% on this value, And if you go back 10 years and you look at the value that was posted last week for a house 10 years ago as an average, it's also 7.9% lower. The graph is consistent all the way. So it's acting like a real index where they've changed. So if anyone's ever looked at inflation, you'll notice that they count 2015 as 100 on the index. Now, the reason they do that is because 2015 was a very stable year. And when you're creating an index, you look for a stable year where inflation, for instance, when you're looking at inflation, where it's not bouncing up and down between 11% and 3%. So, 2 years ago would have been a bad thing. What's interesting about this is they've picked 1 month. January of 2023 is now 100, whereas it was January of 2015. Now, January of 2023 was extremely turbulent in the housing market, as I'm sure Lewis will tell you. And, apart from the fact that there were very few buyers, I mean, the volumes had dropped dramatically. There had been big switches because in COVID, many more detached houses in the country were being bought. That trend was reversing. There was a lot of turbulence. So picking January of 2023 as your index number seems odd, because since then our habits have changed again. If you actually look at January of 2023 and you look at December of 24, you will notice that more semi-detached and terrace properties are being bought. That has increased from January of 23. It is true that fewer detached houses, but also fewer flats. So you look at it and it needs an awful lot of work. And actually James from Otter is doing that work to see whether the justification for changing the index year is valid, or whether it was just the aberration of 2020 to 2023. Yes, you can see it in that graph. Look at January of 23 for flats, for instance.
Yeah, so flats are the yellow line and
correct.
They're high up.
They've fallen off a cliff. Now, if you look at detached, which is the blue line, you'll see that in January 23, they were very low. But now look at the end of 24. They're almost back to where they were over the period 2015 to 2020.
Yeah.
Was that stoppage in the detached properties only because of the big bulge of COVID between 20 and 22? But the ONS, in their wisdom, have decided to change the year, which is why we have it. It has not affected house prices, other than if anyone were to look at the land registry, which they won't because they will look at Rightmove. But if they were to look at the land registry, they might in their head subconsciously go, oh, well, yeah, maybe it's not as much. Maybe I'll put it on for slightly less. But that's just me being very wishful. It makes not a jot of difference to anyone, other than people like me who've got shed loads of static fucking publications and graphs that use the old nominal house price. The utter bastards. They didn't tell anyone. They didn't consult with anyone. They didn't make it public knowledge. They just rolled it straight out today and then put a blog about it this afternoon. Fuckers.
Yeah. I had a read of that, actually. I had a read of that today.
Yeah, I understand why they did it. And if they'd told us in advance, that might have been useful. The interesting thing is it does from a psychological perspective. It now means that when people post these things in the Financial Times and the Telegraph about, the old multiple salary to house price multiple, well, it's just dropped from 7.9 to 7.3. So actually, everything's much better. Of course, if you now go back to the 50s to 90s, you'll find that where it used to be an average of 4.6, it's now 4.2. They really had a good time back then. But nobody's going to look that far back. So psychologically, it may have an impact on the nation. Financially, makes not a fucking blind bit of difference. It's a
this is the point. I mean, the one good thing to come out of this is that it highlights how pointless the whole exercise is.
Yeah.
It's completely pointless. And what's frustrating is that if the government wanted to allow us to know what's actually happening with actual house price transaction prices, they could simply publish HMRC's stamp duty data every month, which they choose not to do.
Well, they do. You can get the stamp duty data, but just not per property, just as
without prices. My point.
Exactly.
They have the granular data, and they have 100% of it.
Yeah.
Right. So that's point number one on the ONS, which is why you should just ignore it and never. And yes, ignore whether it's going up, whether it's going down, sideways. It doesn't matter, because for the whole of the UK, it's of no interest at all. I mean, even the four countries are doing different things. England, Wales, Scotland, and Northern Ireland are all doing different things. Northern Ireland's going through the roof. Property prices over there, that they are rampant over there. They're enjoying some kind of really big property boom in Northern Ireland, and have been for the last few years.
Do you remember the last time that happened, Charlie?
Yeah.
Yeah. I actually think, though, I think there is a significant exodus of people moving from Great Britain to Northern Ireland.
That wouldn't surprise me. I mean, the business and tax situation, despite
it's a beautiful place.
It, yeah, well, a bit on the wet side, but yes, very beautiful. And all of the benefits and perks of Ireland from a tax perspective are disappearing fast, but the salaries are substantially better.
Yeah. And so the other bit of absolute, I don't know what the right word is for it.
Fuckwittery?
That I'll take that. That'll do as good as anything else. Is this annual price change figure that they use? And I'm not going to bore everyone with putting the actual numbers on the screen, right? But the true figure, using the ONS's own data for the annual price change for their bizarre average house price figure, is actually 2.3%. It is half the growth they are claiming based on their own numbers. If you go back and look at the bulletin number they published in 2023, and this is adjusting for the big adjustment they've made today, right? I've adjusted it for that. Then it's a 2.3% increase in that average UK price over the last 12 months. And the reason that this is happening, and I'm hoping, do I have a piece of string? I'm going to use my model Concorde here, right? Just as a bar, right? So we've got right. So down here, this is last December, and this is this December. And last December, they announced prices when they came out were 262,000 with their new adjustment, right? And they're now saying 268,000. But actually, the 4.6% is comparing it with last year's revised down figure. So they're comparing this December's unrevised figure with last December's revised down figure. That is not an accurate comparison.
But Charlie, don't they ever revise the figures up?
No, they never.
What, really? Have you gone back over 18 months, or James, has he gone back over more than 18 months to see that they have never once revised the figure up?
He has. I've got the graph here to show everyone.
Exactly.
It's just staggering. Here it is. I'll share it with him. It's not instantly obvious what's happening here, but basically it's always revised down. And so this is in broad daylight. It's plain to see for any house mover or journalist who writes about the housing market to go and look at the ONS's data, do a little bit of very simple arithmetic, and it is just arithmetic. It's not calculus or anything complicated like that. No equations involved, and you can see that they are comparing. It's like the ONS saying, "Oh, we're going to compare a seasonally adjusted figure for this year with an unseasonally adjusted figure." No, you can't do that. They're different readouts.
Mm-hmm.
And so and the problem here is that many people, including lots of feckless fucking mortgage brokers, Lewis, of which you are not one, thank God. Otherwise, I wouldn't work with you. Going around quoting the ONS. Oh, and they say house prices have gone up 4.6%. The ONS said so. And it's not true, and it's not fair to tell people that. It's misinformation by mortgage brokers when they say, well, the ONS enables them to quote this
It's
error.
our national. The clue is in the title. It's our national statistics. If you can't feel confident quoting that, what the fuck can you quote?
Yeah. And,
I mean,
it's,
I think with the ONS though, I mean, so because I do sometimes quote it, not necessarily that all house prices have gone up, but it is the. I mean, and you can say this about almost every house price index, house price index, is that they are a useful marker of general trends.
Yeah.
They're a useful marker of general trends. As in, if for example, if the ONS said 250 last year and then it was now 230, you go, well, obviously, I think we're in a bit of a rut.
Lewis, I disagree. How is that useful to any one mover?
But, no, I'm not saying it's useful to an individual mover, but in terms of when you're working when you're doing, when you're working in the industry, it's useful to understand where the trends are going. Not that it's particularly useful for, So, for example, when you talk to buyers, it's always very much like you've got individual pockets. Like there are places in, for example, the Cotswolds where prices, no matter what unless there was a nuclear bomb in Oxford, they're going to keep going up. The likelihood is they'll just keep rising because they're so in demand. But you
can't use the ONS's national figure as evidence that Oxford house prices are going up.
No. But what I'm saying is, it gives you just an overall. It gives you an overall picture of the health or the state or dishealth, illness of the housing market in terms of, are they flat? Are they, marginally increasing on average?
Because you're implying that they all move the same way. They don't.
No.
Some are going up, some are going down, and it's that's why it's not useful. Even at a national level, it's not useful, Lewis. This is my point.
For example, in the financial crisis, I mean, you didn't have to be a rocket scientist or to look at graphs to know that house prices were tumbling. You didn't need to do. But as in, you could see, if you didn't know that, you could look at the data and go, okay, well, I mean, it wasn't around then, but whatever data was around, you could see house prices are falling quite dramatically over a short space of time. And conversely, when house prices went in 97 to kind of 2006, that you could look at that and go, house prices are just going up. It may not be in that particular area, but my point was that's the only thing they're useful for, just to illustrate a trend.
But even that, like when all house prices are going up, everybody knows because in their local market, they're like, it's just going up. And that there just happens to be a correlation between what the ONS is saying and what they're doing nationally. But what it does, the only thing it does effectively is that it conceals all regional variations, property type variations, national variations. It conceals all nuance, and the housing market is nothing if not a lot of nuance. Anyway, I'm going to agree to disagree with you on that one, Lewis, and say that mortgage brokers should never quote the ONS national average in the course of advising clients. It's never.
God, no, we never do that when it comes to advising anyone. No. God no.
So onwards to the next thing, Alex. So we've had inflation figures out today. CPI is 3%. CPIH is 3.9%. Owner-occupier housing is now 8%. Wage growth was out, and it's really strong in the public sector, but it's really weak in the private sector, unsurprisingly.
Sorry, I must have missed that. I thought for the first time the private sector actually had larger percentage than public. Did I misread something? I've actually been working all day.
You might be right. No, you might be right. I haven't paid too close attention to it. I just saw there was another survey. One of the papers did a survey where private wage growth for companies employing less than 500 people has gone to zero in the private sector.
Yeah. No, but again, as you've just ranted about the ONS and average house prices, the problem is all of these figures about wage increases are based on surveys that we know, and even the ONS admit, are not being done in the numbers that need to be done. So there is no accuracy behind any of these wage figures. Sorry, there is more accuracy in the public sector, obviously, because that is public purse, they know what they're paying out. But in the private sector, this is still a survey process. They're going and they're asking a bunch of random people. When they're not random, they're selected, but they're not. These people are no longer responding to the surveys, which is why they've just hired a whole bunch more people to go and walk around and door knock offices and say, "Hi, could you tell me how much you pay your staff, please? Is that more or less than you paid them last year? I mean, it's fucking mind blowing that in a world where I don't think any of these employers, or not many, are handing over crisp £50 notes every month. I've got a feeling that they have to submit, their tax returns, etc., to HMRC, and I know that's annual. We want monthly stuff. I get all of that, but there must be a way that you could do a deal with 50 representative businesses or 5,000 representative businesses and just say, guys, every month, can you just report your salary figures back through us? And we'll just get them automatically, digitally.
But HMRC does have this. And it has it every fucking month. Every single month, I have to send HMRC payroll, and it names each person, and they've got their salary history. They know exactly how much they're earning every month.
Your data is private, Charlie. GDPR. They can't use that.
They don't need. Sorry, GDPR only affects people's identifying data. It doesn't affect anything else. So
if it was anonymized, yeah.
HMRC could easily use that as anonymized. They could. They absolutely could. The same thing could with the house prices. I'd like to run something past both of you here. I've been, I don't know why, but I've been cogitating over this about trying to help, especially first-time buyers, understand the nature of the housing market, the housing ladder, house prices, and their efforts to get onto it. And this is generalization, right? But last year, 2024, there were over, I think, 310,000 first-time buyers successfully completed a purchase of a new home, of their first home. And that was 54% of all transactions. And that was, I think, a record. So we got a record number of first-time buyers buying, and that is good news.
And a record amount of Bank of Mum and Dad money spent.
Yeah, well, Skipton did a press release on that yesterday. Only 11.5% of people can afford to buy in the area where they live without help from Bank of Mum and Dad.
Yeah,
so it's like almost 90%. Now, the way I see this is you've got house price inflation, and I'm calling it inflation because prices inflate, values do different things, but prices inflate. And you've got wages, and the way I see it is you've got house prices. I'm imagining a massive battlefield, right? A huge like prehistoric battlefield where you've got the houses and they're running away from the buyers, and the buyers are trying to keep up and catch them. And the first-time buyers are running and trying to catch a straggler at the back of the housing that they can afford, right?
And the way they're trying to do that is they're trying to stun it by throwing wads of sterling at it as it runs away. They're just trying to, it's like just a catapult of cash. I'm just fucking it, God. Some of that, Dad, pass us some more of that fucking cash, boy.
So if you can imagine, literally 300,000 first-time buyers. In fact, it's for everyone that successfully bought, there are probably at least 2 that were trying to buy and didn't. So you've got 1 million buyers every year, first-time buyers chasing these homes, right? And the prices are running away from them. But actually, as wages improve for first-time buyers, and as wages for that whole cohort grow faster than house prices are inflating at, then actually that big crowd of 1 million buyers gets a bit closer.
But that's never going to happen. But that's never going to happen. And we can see that. All you have to do is look at that the graph I sent you yesterday, which shows the average salary spend as a multiple of house price.
Yeah. Did you put on X?
Yeah. Unless you can change the consciousness of the nation and tell people to stop spending every last penny they fucking have on houses, this will never happen, because as soon as they get a wage increase, this is why wages correlate with houses so well. The moment they get a wage increase, they stick it in the fucking house. That's what they use to stun the house so they can get to it. And when you have a bloody chancellor like Rachel Reeves, who is going to relax. So look, you look from 1968 all the way through until 1999. The only time that line is not flat, so average is 4.6. The reason that line is not flat is because of every government intervention. So it went up when they relaxed credit controls and building societies got support and rent controls were removed. Then it went up again in the 79 when Myers was extended and right to buy was announced. Then it went up massively in 90 or 89, I should say, because they deregulation of mortgages allowed banks to start lending, and banks went, yeah, fuck these building societies, we can do much more fun stuff than you. And they went out and they won all of the business. The building societies ended up collapsing, and now it's all banks. Fucking hell. Myra's got expanded to 30k per person. So all the money that anyone thought they could have, they fucking threw at a house. But if there had been no interventions, that line would have been mostly flat, and it would have continued to be the wages that you earned. And the reason I say that is because if you look from 08 all the way through to 24, you'll notice that actually that line is pretty flat. Yes, there have been interventions, but the problem is it's now such a large multiple of people's wages, they simply can't afford any fucking more. But I tell you what, the moment they get a pay increase, they're going to put it straight into a house, because that's the way our nation thinks. And with Rachel Reeves allowing laxer lending, if the banks will do it, just because she allows it, doesn't mean the banks will take the risk. But then she's offering a guarantee scheme for 7 years, so the banks can't possibly fail, backed by us, the taxpayer. So fucking they'll go for it, just like they lent all that money over COVID. It took me 30 seconds to get 35 grand in bounce back loan. I just wrote it to the bank and said it gave me the money. 2 years later, paid it all back because I didn't need it. But getting it because the government guaranteed it. Yeah. And if the government is going to extend the mortgage scheme, and we don't know how it's going to look, we know how it looks now, in that it guarantees for 7 years, and there's only a 5% share that the banks have to pick up, so they still lose a little bit, but not very much. But if this is adopted widely, it could yet again be one more thing to bankrupt the country with the taxpayers' money that they don't have because they spent it all on fucking houses.
I think an important point to remember here is as well is that with the mortgage guarantee scheme, I mean, way before COVID, 95% mortgages were a thing. Way before COVID.
Yep.
And so, by the way, everyone, I put a link to that graph. The graph above me on the screen here is a link in the live chat to Alex's post where you can have a look. And it's worth having a look at that because it's a fascinating graph. Sorry, Lewis, keep going.
Yeah, so way before COVID, 95% mortgages were standard. They were normal. I can remember doing 95% mortgages in 2015 and in 2020 before COVID, and then there was a brief period where they went away. And then before the government even announced the mortgage guarantee scheme, I think it was Accord, which is the broker arm of Yorkshire Building Society, came out with 95% lending before the MGS had even been announced. And then they announced this. Then they announced this big. We are, it was the Conservatives, of course, at the time. We're big, that kind of holier than thou. We're going to be on the side of first-time buyers. Look what we've done. Like they were going to do this anyway. They were all going to come back at 95 anyway. And now all you've done is just introduce some additional moral hazards. So thanks for that.
Yeah. Thanks for putting us on the hook for something we didn't need to be on the hook for, you bastards.
So I don't understand why when they're talking about this kind of thing with the mortgage guarantee, it doesn't need to be there. Lenders will lend. They've got plenty of cash to lend. There's plenty of cash floating around the financial system that needs to be put to use somewhere. We don't need it. It's not necessary.
No.
It's not necessary.
No, but it, as you say, it just introduced a nice bit of risk for the country.
Yeah.
So why do they do it?
They're fabulous at doing that, aren't they?
Yeah, because it looks good on paper for people who don't understand it, Charlie. Oh, look, the government are going to guarantee this, so I can go and buy. I can not only that, even if I had a bit more money and I could have put a 10% deposit down, why would I bother now? Because the government's going to back it, and I'm sure I'm going to be okay.
It's funny you say that because actually I've spoken to buyers many a time, and in scenarios where they think the MGS guarantees them.
Yeah, exactly.
No, it's for the lender.
Yeah, not you. You still lose the house.
Yeah, so I've had situations where people come and go, they've got the credit profile shot to bits, and go, well, I've been told that there's a mortgage guarantee, and I'm like, yeah, it backstops the lender, not you as a borrower. You still have to be A1. It's never particularly well explained in the media. If they're going to do this kind of stuff, they should at least explain. But half the problem with that is the politicians don't even understand this stuff.
Correct. 100% you are right. All they know is that they can go on television and say, we are the party that helps first-time buyers. Look at us, aren't we wonderful?
Well, okay, so Alex, what I was trying to talk about was that actually in the last few years, because wages have been rising faster than house prices,
Yeah.
that affordability has slightly improved.
Well, you can see at the end of that graph there, from the madness of stamp duty holidays, which is, which gave us a new peak in lack of affordability. From 23 onwards, affordability has come down from 9 times salary to only 7.9 times salary. It's still ludicrously high, but it is better.
Yeah,
It's
that's
come
my
down-
point. And so my point is that that obviously anywhere that the blue line on that graph, that very excellent graph, continues to go down, is a gradual improvement for people trying to get a home, right? It's a slight improvement. And what you're suggesting, Alex, is that with the things the government is saying they're going to do now, that blue line's going to go back up again.
Correct. Because it will, potentially it will make people believe that yet again it's a good idea to put all their money into houses, and the bank of mum and dad is not going away anytime soon. In fact, whether it's gifting, or whether it's the boomers dying and therefore leaving an inheritance, and in most cases those houses will have to be sold because there aren't that many children in inverted commas, because many of them will be in their 40s, 50s, and some even in their 60s, won't be able to afford the inheritance tax if it's a particularly big house, or will already have a house that they prefer to live in and would not want to go back to their old family home from 50 years ago. So, they'll sell them. And then they'll have a nice big cash thing, which they can pass on to either for themselves, because there's plenty of buyers in their 40s and 50s, or onto their children.
Yeah.
So I'm just going to put this out there. So I've started writing a book. I've never written a book before in my life, but I've started writing a book, and it's about this entire thing. The title, or the working title at the moment, is "If you don't buy now, you never will." And that's not, and it's basically explaining that because of the huge wealth transfer that's about to occur over the next kind of decade or so, that we are going to foresee, because all that cash, you're right, it will end up getting, because it'll end up getting capitalised into housing unless we have some kind of fundamental radical change bill. And it's basically about how I think that will pan out. Because and that's not meant to be everyone should just buy whatever, but it's basically this is the reality we're going to be facing because of the huge intergenerational wealth transfer that's about to happen.
Well, Charlie, I mean, Lewis, I don't disagree with you. It's one of the ways it can go, and I'm sure Charlie will remember over 2 years ago me joking, and I'm sure he thought I was joking when I talked about the new SaaS, not software as a service, but shelter as a service. And there are going to be.
You will own nothing and be happy about it.
Yeah,
that's what we're told.
There's definitely going to be a large proportion of society, and we can see that already. The number of renters in this country, households renting, has increased by 8% over the last 20 years. And people will go, well, 8% is not very much. That's 8% of 28.4 million households, with an average of 2.36 people in each household. When you look at it that way, you're looking at potentially somewhere between 4.5 and 6 million, let's say, people who are now renting rather than owning their home, as they did in 2003. And that number is only set to increase.
With apologies to all of the baby boomer generation who are watching this, I saw a post about what's happening in America. And I looked up what was happening over here, and at the moment there are apparently 88 people of that generation shuffling off this mortal coil every day in the UK at the moment. It's about 2,500 a month, and 80% of them own property.
Yeah.
So while you two are both agreeing that no one's ever going to be able to buy a home again, if we're going to see supply continue to increase, and if wages are continuing to increase, why? Why is it that you think buying isn't going to get easier?
Well, for me, I think it's primarily because the mindset is such that whenever we see wage growth, we see house price growth in the main. That's not saying that it's always going to happen, but generally we see wage growth, we see house price growth. And when people get a lump sum of cash, we're not very good at it. But that's one of the reasons why people aren't very good at saving into the pensions. It's very difficult to imagine that you get to that age, but you can feel and touch bricks and mortar.
Yeah.
And it has this kind of trance-like effect over people. And so I don't foresee that changing anytime soon, because it's now just part of our social identity.
Yeah.
In a way that it's not in much of continental Europe.
How many generations would it take to change the average Brit's mind that putting all their money into a house isn't a good idea?
Oh, I see that changing already. I see that changing already amongst younger guys today.
Well, that's only because they can't afford it.
No.
Once they get an inheritance, they may go, oh, crap.
I've had people contacting me and saying, I've really done the numbers here. And do you remember I was putting out the fact that your rent is the maximum amount you'll ever pay for a property, and your mortgage is the minimum amount you'll ever pay because you've got maintenance and everything else. And that sparked people to do some stuff. And they did some number crunching and worked out that actually they genuinely thought that they would be able to accumulate the funds necessary to buy a home outright faster by renting and investing until they had enough than they would by buying and paying off a mortgage.
I've got to be honest, I think they may be optimistic in their investments. But
okay, I mean,
and it depends on where you live, but they make a valid point. I mean, certainly up until very recently, there was no doubt that renting for me was substantially cheaper than it would have been to buy. And the investment of the difference would absolutely have made a massive difference, especially over the last few years.
But the maintenance costs have become genuinely eye-watering, right? Whether you own a leasehold flat and your service charges have just gone through the roof, or whether you're paying, you need to get roofers round to come and re-roof your leaking roof in your house, or redo your boiler or your plumbing, or whether the EPC changes coming around are going to force everyone to upgrade their properties. Maintenance, like owner-occupier housing cost inflation is currently 8%.
But that's why the people who think they're going to get a massive inheritance from their 6-bedroom boomer house may be in for a big shock, because the two things that will stop that transfer of wealth, though, as you know, are number one, no one can afford these houses, not because they can't afford the sticker price, they simply can't afford to maintain them and heat them because their energy ratings are so bad. And the other thing is care home costs are now so high. And unfortunately, this generation, by this I mean the boomer generation, are living much longer. The old stats were 2 years on average for a care home. But with dementia on the increase and longevity still, the physical body still going, but the brain shutting down, the estimate is that could reach as high as 5 years in the not too distant future before the end of the boomer generation. Well, 5 years at somewhere between 60 and 120,000 a year for two people in a couple. Well, that eats into the old house price, especially when the price.
There's a 250% increase in use of the capacity of the care system.
There's something to consider here as well, in terms of, we also know that people aren't making adequate provision for their pension for a number of reasons. One, because either they've not bought a home and therefore the rents are extremely high. Two, they bought a home and therefore they're spending all the money paying the mortgage and not paying as much into a pension as they would perhaps ideally like or are able to. So what's the only thing that they've got to rely on, or something else that they can rely on? And of course, I suspect we're going to see. I kind of twigged on this about a decade ago with equity release, where I was like, right, so we've got loads of insurance companies that are happy to lend money, effectively risk-free, because they know that people are definitely going to die, and while ever they're alive, they're in a house.
Yep.
And so I think we might as well end up in a situation where it's effectively corporate landlording by the back door. That's me with a bit of conspiratorial hat on. Because then you've got all these homes where, they're worth a fortune. And, the people in them can't afford to live. Equity release, happy days. And therefore, then you've got all these properties that potentially insurance companies are sat on. Now, they will ordinarily sell them, but of course, it's up to them to sell. Well, ordinarily, it's up to them to sell them. And so that's something else that perhaps needs to be factored in as well.
Yeah. Yep.
Everyone needs somewhere to live. Honestly, at the moment, I especially for larger houses, the maintenance and the quality of new homes is just shocking. They're not lasting as long as they should do. We have a crumbling old housing stock. We have a flaky new housing stock. We've got rising costs of I don't understand how anybody sees property as any sort of investment financially at the moment. Yes, okay, if you are in the industry of build to rent and you're building intelligently using high tech and that's different, right? Yes, I can see that there are large funds investing in large build to rent and they're doing it well, and that's good, right? That's good. That's good. And actually, I kind of hope they keep doing that, because that's going to provide more reliable homes with more reliable costs. But for so many people, honestly, it feels like we're going through a sort of slow motion state of real flux at the moment in the housing market, in the economy. It's a weird old time. And of course, the more uncertainty there is, the more you kind of want a home. We just want a home and go, can we just batten down the hatches in our home and watch the world tear itself to pieces?
Well, that's what we're all hoping for, isn't it? That's what. Was it Kazuru? Or what's the guy that wrote Remains of the Day? What's he called?
Who?
What's the author? The Remains of the Day. A Japanese guy. But we're all secretly waiting for the end of the world.
Yeah.
Yeah.
Listen, guys, it's been fantastic. I'm going to wrap this up now, and I'm just going to remind anyone out there, if you were watching from the beginning where Lewis was talking about how many buyers don't get their paperwork together properly, just be prepared. And when you are buying, you've got a better chance of getting your offer accepted, whether you're competing with other people, or whether you're going in with a disappointingly low offer for the seller. Get your paperwork ready and come prepared. If you don't have a whole of market independent mortgage broker that you trust to talk to, you can talk to Lewis and my other partners at Hudson Rose, on that link below Lewis's handsome mugshot on the screen there, mhwc.co.uk/mortgage. And if you do end up going with them, helps me out too, because they do like to send me a little thank you every time that you do, so that's much appreciated. And otherwise, Alex, thank you very much for your time this evening as well.
Pleasure. Thank you, Steve. Thank you, Kate. Kazuo Ishiguro.
That's it.
Kazuo Ishiguro. Yeah, yes. That's right. And for everyone else, remember, if you're selling, don't overprice. If you're buying, don't overpay. And last minute bombshell here. I've been discussing today with my team at Best Agent, so for those of you who don't know, bestagent.co.uk is a national property site. We've got all properties for sale in the country on there and to rent. And we just today were discussing the possibility of allowing the sellers, the owners of all the properties that are for sale, to come to the Best Agent website and claim they go, that's mine, I'm the owner of that property, right? And they will then be able to log in. Once they've proved, they'd have to prove their proof of address, actually prove that they are the owner of the property, right? Also allow buyers who are looking to actually put feedback against the properties that they're looking at. Why they want to view, why they don't want to view, what think of the property, what think of the price. Not so that the public can see it, but so that the sellers can see that feedback from the buying public. And again, only buyers who properly registered and we know who they are, we've got verified information, will be able to do it, because we don't want it turning into a fruit fest, if you know what I mean. We don't want it turning into just people slinging insults about stuff. But we did this with one particular estate agent's website, and it went down really well, because what it did was that actually the sellers got the cold hard truth from buyers looking at the properties. And it catalyzed conversations that basically led to transactions happening faster and sellers who were a little bit unrealistic coming down to earth a bit more quickly.
Yeah.
So, that's what we've been talking about doing. Now, agents aren't going to like that, but agents who want to will be able to also log in and see the feedback as well and discuss it with their clients, or not. It's up to them. Anyway, there's that. I'm going to see how that goes down. It's going to go down like a cup of cold sick with some of the agents I know. but the other ones, I think it should lubricate the market nicely and help things happen faster. Anyway, guys, yeah, thanks for watching. See you on the next one. Good night, Lewis. Good night, Alex. Good night, everyone else. Thanks for watching.